Hi, my name is Jack Boyajian. I'm the CEO of ENDVEST.com, and we're here to talk about the Baxter Creek Loft project that's available for investment online. As those who are watching here, you might have come through the ENDVEST site. You can go back and look at more details about the project. But today we have Charlie Oewel here, who's the co-developer, actually the primary developer locally. And we're going to talk about Baxter Creek and give some background as to the location and why we think it's a great investment. Keep in mind it's a 46% return, IRR return, almost a 2.6 multiple on a 30-month investment, a very unique opportunity to get in on a very low land basis and ride the value appreciation once the project is actually entitled for 138 units, actually, right? Charlie?
That's correct.
138 units. I know the site says 132, but we're going to update that. So, Charlie, can you give us a little background about yourself, and then we'll go into the PowerPoint that you prepared for us?
Sure, I'd be glad to. I started my career in the finance business. I'm a finance major from Wharton School, University of Pennsylvania, and I was employed in Texas by Citibank as a real estate lender. I counted Trammell Crow and Gerald Hines among my client base. I learned a few things from them. And back in the 70s, I put developer shoes on myself and started developing in Texas. In the early 80s, I moved to San Francisco. My operation here commenced immediately in developing multifamily housing, but also in some mixed-use projects, including grocery-anchored strip shopping centers. So altogether here in California, I've developed close to 3,000 apartment units in markets all around the Bay Area, also the state of Washington and also Nevada. I've also included about 500,000 square feet of commercial retail in that mix. About 15 years ago, I started developing an outgrowth of my multifamily business, student housing. The first project was located in Berkeley. That led to a number of student housing projects as I learned that student housing was an underserved market in most major university towns. Universities are constrained by capital. In most cases, they are trying to house only their freshman class and maybe a fraction of upperclassmen. So it turned out that is an excellent market to serve, and I've continued to develop in Berkeley for that reason. Berkeley has an incredible university. It's a great university town, as you know. The student enrollment has been growing rapidly, and competition for housing has pitted students against workforce. And we'll talk a little bit about workforce in a minute. We can switch to the PowerPoint now at this point. And I want to first state that the tight housing market in the Bay Area is just directly related to employment growth. You can see in this slide that the San Francisco rents have outstripped any other major city and metropolitan area in the U.S., even eclipsing the cost of housing in New York.
And by the way, Charlie, we should remind our listeners that this PowerPoint will be up on the website as well, on the Baxter Creek project site. So if you miss anything as Charlie speaks, you can always go back and review it as well.
Yep, good. Okay, summary of conclusion. We have, in the Bay Area, we have generated 575,000 new jobs in the past 6 years. And that represents 75% of all new job creation in the state of California in that period. What's doing that is tech. The tech industry is alive and well. Silicon Valley is legendary, and that is the majority of the job creation. But it has not centered in Santa Clara and Silicon Valley. It's really spread throughout the Bay Area and especially San Francisco. During that period of great employment growth, the housing delivery, new housing completions has lagged behind demand. And just to put that in perspective, in that same period of 6 years, there's only been about 40,000 new housing units, multifamily housing units created, and that equates out to about 8,000 housing units per year. So you juxtapose nearly 100,000 new jobs against 8,000 new housing units, and it's nobody's surprise that rents have gone up.
And that's per year.
That's per year.
That's per year, so
Yeah.
it's pretty substantial. Did you want to mention anything about the El Cerrito situation?
Well, as I've stated, I've been focused on Berkeley, and interesting fact that the city of Berkeley has also fallen behind in the supply of new units. We'll see here in a slide that the market in Berkeley has fallen behind demand, and what that means is that rents in Berkeley have gone up faster than any other market in the Bay Area other than San Francisco. As rents have gone up in Berkeley, students as well as workforce have been pushing into other areas and other locations. Public transit is one of the major corridors of that growth. I've been a developer of transit housing for decades. My first project was completed in early 1980s, and next to a BART station, and I found immediately there was very high demand for units in walkable distance to that BART station. So I've been a transit developer ever since. When I saw the prices escalating in both land and rents in Berkeley, I followed the BART line going north. El Cerrito has 2 BART stations, and it's directly north of Berkeley. It's only a 6-minute BART ride from Berkeley to central Berkeley to El Cerrito, and that means that it has great attributes as far as being a transit-oriented community. In addition, there is express bus service from El Cerrito into downtown San Francisco and downtown Oakland. You can take a BART ride, or you can take a bus ride from El Cerrito and arrive in downtown San Francisco within a half an hour.
So Baxter Creek, where El Cerrito is in El Cerrito, of course, it's in the northern side of El Cerrito, and so from that location, there's a bus stop right by where the project is going to be located, correct?
Right out front.
Right at the front. Okay, and that could take you right into San Francisco.
That's correct.
Within a half hour drive.
Yeah, right. And it costs less than $5 per ride, and obviously, you're not paying for the bridge toll, which is now going up by 30%. I saw in the headlines this morning. So,
wow.
Yeah. The other thing that I found very attractive about El Cerrito is that it's really encouraging developers to develop housing in that community. To make that a fait accompli, the city council has adopted a form-based zoning code that streamlines the approval process for developers. It gives a developer like me the template for exactly what I need to provide in density, parking, and other zoning issues that would comply with this form-based zoning code, so that within 6 months you can have a project approval. When you compare that to the city of Oakland or the city of Berkeley, new projects take over 2 years for going through the zoning process to get a land use approval. So there's multiple reasons to go to El Cerrito. The greatest one, though, is it has great access, great connectivity into the employment centers, also great connectivity into UC Berkeley. Okay, let's get back to the macro picture here. 575,000 new jobs in the Bay Area, and one would think that new housing would be following suit. However, there's many constraints in the Bay Area to new housing creation for developers like myself. First of all, land is constrained. Land available for development is constrained by geography, and also the zoning barriers are geared to obstruct new housing production. In most of the Bay Area, the activists are opposing new housing creation for a number of reasons, but not in my backyard is one of the major ones. Other factors that have slowed down new production is obviously the slow recovery to the 2009 economic crash we experienced. Also, banks have been slow to respond to financing demand by developers because bank regulation and also constraint of credit has been a major factor. So, with the fact that you have nearly 600,000 new jobs in 6 years and only 40,000 new multifamily units, rents go up, and rental rate increases have been endemic. We've seen rental increases double digit in all of the East Bay and San Francisco and Peninsula markets, double-digit increases that have brought rents to a factor of $6 a square foot in San Francisco. That means a 1,000 square foot unit is going to rent for $6,000 per month, and that affordability factor has been a big issue. So that has caused a big demand for housing to shift because San Francisco is a big employment center, but with rents not affordable, people are now, and for the past 2 years, have been shifting into housing in the East Bay, near East Bay, Oakland, Berkeley.
And that's why we're seeing in this particular chart the significant appreciation in rental costs, right? I mean, these are annual increases from just 1 year.
Yeah, this is 2015 to 2016,
right?
And you can see rental increases have slowed down a little bit now, but and they've also gone.
Well, they slowed down in San Francisco because it spiked so high at $6 a square foot. That's higher than New York, really.
Yeah, it is. It is. Yeah. So rental escalation is a major factor in the East Bay that is making new housing very attractive. So this graph, go back to that one. This shows employment growth in the Central Bay Area. That includes San Francisco, San Mateo, Alameda, and Contra Costa counties. Our project in El Cerrito is in Contra Costa County, very close to its borderline with Alameda County, meaning it's a pretty close-in market. And you can see employment growth has been very rapid since the 2009 period. It slowed down a little bit earlier in 2016, but then the last two bars on the right-hand side, you can see a huge jump in employment growth for those markets in the past 6 months. So again, we have this slide showing how that job creation has been spread out between the various markets. The bar on the left is showing Santa Clara County, and I would like to state that the total population of Santa Clara County is double that of San Francisco. It's a large area. It includes Silicon Valley, and that's where huge employment has been centered. However, none of the other submarkets have escaped that. You see every submarket has had major expansion in new jobs, meaning that in the Bay Area, the unemployment rate is now averaging 3.6% compared to California, which is about 4.5%, compared to the U.S., which is currently 4.9%.
I think that shows.
And that shows how unemployment has fared through the trough of 2009, increasing, and there you go. The blue line is the U.S. unemployment rate. The green line is the Bay Area.
The Bay Area.
Yeah.
Oh.
Now, new supply of housing. This slide shows new housing has jumped up in Oakland, San Francisco, and San Jose. But even though it's increased, its rate of increase is still not keeping pace with demand created by the big job growth. Next slide, please. So this slide is showing new supply of rental housing. As new supply ramps up, rent growth has slowed, but still remains above 5% per year. And occupancy remains very tight. This slide shows another picture of low vacancy, and apartment communities in the Bay Area ended the third quarter of 2016 with a total market vacancy of 4.2%.
Which is historically quite low.
Historically quite low. It's unchanged from the previous year.
Right.
So the market is very strong.
So even with the rate increases in the rental market, and we saw that with other than San Francisco, which had spiked, which had gone up, about 30-40% before it tailed back recently. The reality is that the market picture was that you had 30, 40, 50% in some cases in rent increases, and yet what we see is it's a 4.2% vacancy. So rents are going up, vacancy rates are either stable, and 4.2% as a multifamily housing developer, that's not bad at all, correct?
That's absolutely correct.
Yeah, and I think our pro formas actually hold that 4% as an assumptive in our when we're looking at our operating results.
That's correct. So I also want to make a statement about a lot of talk about a bubble in the Bay Area market, and especially related to real estate. There is no bubble. We just have really high rents because it's driven by this incredible, robust demand that we're encountering. Job creation is not abating. Job creation continues. You can see the last 2 quarters in 2016 in the slide previously shown that the job creation has continued to accelerate. So if you keep going back, let's take a look at one more, that one. You can see it just marches forward, and the driver of that is the tech industry.
Is the tech industry.
Yeah.
Okay, so Charlie, we're back to the slides. So we're looking at the difference in comparison of West Berkeley and Emeryville rents from last year to the middle of this year.
Right. I farm this West Berkeley Emeryville market, and I have been keeping tabs of average rents over a sampling of nearly 1,300 units that I continually monitor. So you can see that there's production of new housing that when new housing is put on the market, it might show a blip in vacancy, but as those units are absorbed, that vacancy
it's quickly absorbed.
And it goes back down.
Sure.
At the same time, rents have gone from $3.20 a square foot to $3.70 a square foot on average in this West Berkeley Emeryville market.
By the way, Charlie, I know this takes up a large area of the geography, but what is our average rent that you're projecting when Baxter Creek comes online? What is the rental rate that if you could recall? What is it that?
We're projecting about $3.60 a square foot in Baxter Creek. It's a very similar market to West Berkeley Emeryville in existing rents, but there's several advantages of Baxter Creek over West Berkeley Emeryville. Transit is the major factor.
Right. Okay.
Okay, so this slide is showing Bay Area employment as it relates to the housing market in the Marin County, Oakland, and San Francisco markets. San Francisco is the green bar, Oakland is the gray bar in the center, and Marin County is the beige bar on the left. You can see in all types of units that there's a wide spread between San Francisco and Oakland. And I'm going to use Oakland as the East Bay default point. Difference in aggregate rents are about $1,000, $800 to $1,000 for the same size unit between Oakland and San Francisco. So that demonstrates huge rent cost differential that is attracting people back into the East Bay.
Okay. So in terms of El Cerrito, what you're basically saying is that the expectation is that people will come to El Cerrito, especially Baxter Creek, because they're going to save a lot of money in rent and still be very close to their whether they're in Berkeley as students or whether they're working in San Francisco as tech consultants or whatever. They're going to have an opportunity to live in a very nice place, brand new, and pay a lot less in rent.
Well, that's absolutely true. El Cerrito is a very attractive community in the hills that have views. Single-family housing averages $1 million and up. Mm-hmm. So single-family housing is priced very high. The politics of El Cerrito are very favorable to developers because they want to attract new housing, and they see that as their way to economic vitality for the city. And that has encouraged this form-based code, which I talked about, lower regulation of development, and actually low barriers presented by the fee that developers have to pay for new housing. The cost of municipal and school district fees paid, and also utility fees paid to the various agencies in El Cerrito is about $25,000 per unit. It is about $70,000 per unit in Oakland. So you can see a huge difference.
That's
right?
a big difference.
Yeah.
Okay, so we're back on the slides, Charlie. What is this telling us?
Well, the rent escalation, which I've been talking about, results in very low cap rates. Cap rates in the East Bay for newly developed property, they're sub 4%. Across the board for older product, rent-controlled product, and new product, cap rates are averaging about 4.5% to 5%. But for first-class, newly developed property, it's less than 4%.
And what are we projecting on our pro formas on our exit strategy? Because the plan is to build, then to lease up within 2 to 4 months, and then to sell to an institution, correct?
That's correct. So we're projecting a 4.5% cap rate.
So we're actually we're projecting even a higher cap rate than what the market conditions are right now for a new product. So that gives us a little bit more lower risk factor in terms of exiting as expected. Just for the audience's sake, it's true, right, that the higher the caps, the lower the value, the lower the cap, the higher the value on the exit, correct?
Yeah, that's correct. So if you have an income stream, and you would be looking at a cap rate of, let's say, 8% in a market, let's say in Texas. That income stream of $1 million would be worth about $8 million in Texas, but in California and in the Bay Area, it's going to be worth 50% higher than that.
Yeah, exactly. Yeah. All right, so we're
that's another cap rate picture. The outlier of Alameda County is not representative of the El Cerrito Berkeley market, as I pointed out. But you can see cap rates are very low across the board. El Cerrito, Berkeley, because of the tremendous pent-up demand and low vacancy and rapidly increasing income level, cap rates are lower. Also, this slide shows over the years that average price per unit has been increasing rapidly. Again, a factor of escalating rents and low cap rates.
And this includes both existing housing and new housing. The same.
Yes.
This is all an average.
This across the board.
And this is the price that the buyers are paying once the product is purchased, built, and or sold.
Yeah.
If it's an existing product.
Yeah, and you can see it's close to $500,000 a unit for rental housing right now. Okay. County by county, rents are, you can see the differential between Berkeley and San Francisco. Berkeley is number 2 in the totem pole because of the high demand that's created by student housing as well as competing with workforce housing for the available supply of housing in that town. So we feel pretty comfortable with El Cerrito being just I think almost an equivalent location to Berkeley.
Sure, only 6-minute BART ride.
Yeah,
basically, right? These are the trends in the current rental.
That's correct. You can see over the years the rent trends have been very dramatic. Year to year, 2015 to 2016, San Francisco is seeing a modest decline of a little less than 2% in rent as the sticker shock is settled in. and as demand has been pushed to the East Bay, Oakland rents have gone up rapidly. Marin County is the North Bay, and that's also impacted positively. Rents in the past year have increased in both those markets by 5%.
And is this an average across different unit sizes, or is this what kind of size units are these? Are they a mix of 1 and 2 bedrooms?
Yes, RealFacts is the source of this information, and they just took the average rent over a spectrum of unit types.
Okay.
And that's the end.
So, Charlie, great presentation. Thank you very much for helping our audience to understand the market and how unique it is, right, from almost any other market in the country, in terms of demand and the lack of supply, and how you as a developer and ENDVEST as a provider of capital is helping to really change that. You've told us a lot about the decades, the 3 decades that have actually kind of made this differential in supply and demand come right at us, right? I mean, do you see a change? I know you mentioned that you don't think so because the demand is really based not on speculators driving up the pricing of housing. It's really a demand-based increase, correct? So you don't really see a difference. You don't see a decline in that. The Baxter Creek's going to come online when, in terms of for rent scenario? What is your expectation?
It'll come online in 2019.
The beginning of 2019.
The beginning of 2019. What is happening in the various micro markets here? Let's talk a little bit about Berkeley, because that's where this demand is being pushed from. The reason that student housing is part of the equation here is that UC Berkeley, University of California at Berkeley, has expanded its student headcount in the past 3 years by 13%. That means that 4,000 new students have been brought into the UC Berkeley student body, and at the same time, this university has added only 500 beds. They have another 800 beds which have started construction, but they won't be online for another 2.5 years.
So what happens to that extra 3,500 students that really can't be absorbed into student housing on campus?
Yeah, well, let's look at what new housing off campus has occurred in the city of Berkeley. New housing, both completed, under construction, and in the pipeline for new construction through 2019, totals about 1,800 units. Not all those units are going to be leased to students because there's this real competition for housing between workforce and students. So what we're seeing is that of those units, I project about 25% of those will be absorbed by students. The rest will be workforce. So
therefore, there's still a pretty wide gap where the students need to go elsewhere. And isn't it true that over the last 4 or 5 years, at least 40, maybe even 50% of students at Berkeley, both at all levels of undergraduate and graduate levels, are really living off campus, right? And even outside of the 1 mile radius that would normally be considered university housing.
Yeah, and the fact is the chronic undersupply of units in the Berkeley market has created this crunch for students finding places. And it's where couch surfing started because students wind up sleeping on a couch.
Sure.
So Berkeley has constraints to new production, and that pushes that demand into surrounding communities. and it also has pushed student demand into El Cerrito. So that's another factor for our consideration here.
Tell us a little bit about how Baxter Creek also helps for those who need below market rate rentals too. We're contributing to that, aren't we? Isn't some of the units also going to be available to the affordable market?
Yeah, we'll have a mixed income group, not only transit oriented, but some affordable units that will be made available to households with incomes of 50% of average median income in that market.
So that's about about 45,000? Because the median house
50% is about 40,000.
40,000.
And so that you're not talking about homeless people here. You're talking about teachers, police force, workforce housing that will be made available to people that are serving the community.
And so even with those lower income, the Baxter Creek projections still provides tremendous upside for the investor. So both the investor is doing extremely well as the product is contributing to the affordable stock of affordable housing in the market.
Yeah, and one of the things that the developer receives as a benefit for providing the affordable housing is a density bonus. So that allows us to go from probably 110 units to 138 units. So we're producing more housing. Some of it is affordable, but the market rate housing is what makes the project feasible.
That's great. And Charlie, we know you're doing a few other projects in El Cerrito. How does that help you? The fact that Baxter Creek, which is the largest one in El Cerrito that you're doing, correct? So the fact that you are in El Cerrito with other projects, how is that going to help the Baxter Creek project?
Well, the two other projects I have through my own pipeline totals about 160 units. So altogether, I'm going to be delivering about 300 units.
Almost 300 units.
And that will do several things. First of all, it's going to generate some efficiencies of scale for the general contractor, allowing us to deliver a little bit lower price point than if we were just building Baxter Creek standing alone. But it also creates management efficiencies so that the cost of property management will come down, and the cost of maintaining the projects will come down as well, so long as they're all together delivered as a portfolio.
Charlie, you spoke a little bit about the transit zone area that the city of El Cerrito has created and how that has provided with a fast track opportunity. But let's talk a little bit about the minimization of risk as well, because this land is being acquired potentially before full entitlements are granted, but there really isn't a risk in that regard, correct? Because the parameters are all essentially prescribed by the ordinance, and so is there any risk that the project won't actually be accepted by the El Cerrito planners?
Well, El Cerrito set forth a route to approvals that avoids risk. The reality is, under the form-based code, the city did an environmental impact report that covers the first 1,700 units delivered in the city. That means all of the CEQA, California Environmental Quality Act requirements are already met. And it means that we go straight to a use permit without having to go through City Planning Commission. it's by right zoning. So long as we conform to the form-based zoning code, we are entitled to build this project. The only approval is one hearing at the design review level, where they're looking at things like colors, landscaping, what is the project going to look like, but it doesn't allow descent to occur based on project traffic, view corridors, any of the major factors that create difficulty in other surrounding communities.
That's great. And just one last thing, the Baxter Creek Lofts as a product being built by you and introduced into the market actually provides unique amenities, right? Or different advantages to the renter as compared to other product that exists in the community or even being built, correct? What are some of those extra benefits that are going to come to the tenant who's going to be living at Baxter Creek, and how does that help us as investors?
Well, we'll have an amenity-rich project. First of all, transit. I can't start any conversation without talking about transit.
Sure.
But we're going to deliver amenities in this project that will include a fitness center. It will include an outdoor living room with a full kitchen, allowing residents to enjoy our wonderful weather, having an ability to entertain with the common area that we are going to make available. Also, adjoining this project is a new park that is being created at the cost of $3 million. The park actually is on a 10-acre site that will join the Ohlone Greenway in El Cerrito to the Richmond Greenway in the city of Richmond. And this is a hiking and biking trail that provides great access and great recreational amenities.
It's going to have a nice walking index too, isn't it? Or does it already have a walking index?
The walk index is 76, which means that most daily errands can be done on foot. Mm-hmm. So we have many retail operators, grocers, hardware stores, Home Depot, and the commercial district up and down San Pablo that allows people living on this in this project to stay out of their cars. In fact, part of the city's goal here is to get people out of cars and have them rely on transit, walking, and biking. So we are providing, to comply with the code, we're going to be required to provide one bicycle parking space per unit. They're emphasizing bikes, not cars.
But we will have parking for cars as well.
We're going to provide parking for cars. No question about that.
Okay, Charlie, thank you very much for the time you've given us. I'm sure the potential investors and the actual investors in the Baxter Creek Lofts project are very grateful as well for your insight and your justification for really being so proud of this project and being so hopeful. And so we thank you for the time. Thank you for joining us. Please, if you have any questions, you can send them to us and Charlie will answer them. We will answer them. You can get in touch with us online through email, as well as our phone number, which is all on the ENDVEST.com website. And we'll hopefully see you soon. Thank you again.